this means for the economy, and why are they moving in this direction? So why do you think they're doing this at this point?
Well, I think it's a very good question. And what's happening is that the US dollar is becoming less and less relevant as the reserve currency of the world. You can see this in the US dollar index this year. It's absolutely crashing. It's in crisis mode. And the fact is, and Americans need to embrace this new reality, the US is no longer the superpower. It's one of a few superpowers. And those other superpowers do not want to yield or bend to the petrodollar system anymore. They had no choice in the past, but now it's becoming much clearer that the demographics of some countries are much better, that the economies of some countries are much better, and the future is not bright at all for the US dollar. China is instigating a debate, it's instigating a discussion about the relevance of the US dollar, but they don't instigate these discussions by playing nice. You're not going to, approach this in a normal manner. They're going to do what governments do, which is to instigate a problem which will, create a situation where the mainstream media will come in and G7, G20, they want to raise this to the table, to the discussions table. And what they're doing is, like with the oil futures exchange, it's convertible into gold. So they're basically saying to the Americans, we do not want your system. We're gonna do something that's much better. We've accumulated gold for 30 years now, or I should say 20 years. In a massive level, which is what 30 years. China has been accumulating massive amounts of gold for 30 years, and they can now really take possession of much more of the global trade and bypass the dollar system. And the other thing that China is seeing is that the U.S. is not changing trajectory, and that's important. So 2008, I bet you that behind the scenes, under the counter, the U.S. government, the Federal Reserve, all these officials, they made all these secret trips into China and the Bilderberg Group and other groups, and they promised that things are going to change. That they made assurances, and nothing is changing. In fact, the trajectory for the national debt is only going to get worse and worse. It's going higher and higher, and there's a huge debt resolution problem in the world. So that's why I think China is going in for the kill. They're obviously, in about 2 weeks, going to be officially added to the SDR basket. Everything is moving in their direction, and they want to leverage this.
Now, the U.S. came out and they said because of North Korea that they were going to they might cut off China with the SWIFT system, the SWIFT payment system. And they said because of what's happening in North Korea, we might just cut you off. I mean, is this really a big deal for China if the U.S. decides to cut them off?
Well, it is. It's but it's nothing. It's it's like me telling my son that I don't want to talk to him anymore. It's not going to happen, right? It's just saying stuff to instigate a response, or to fabricate news in the media. Obviously, the U.S. cannot do this. They don't have the political power to do this. But let me go back and tell you why it's happening right now. The central banks of the world have lost control over the market. They've run out of tools, and smart money, institutional money, sovereign wealth funds, pension funds, they understand this. They understand that the Federal Reserve and the ECB, the BOJ, they came in with liquidity in 2008 and basically created, on top of the taxpayers' back, a system that can last a few more years. So they injected this liquidity, they zeroed out interest rates and drove them to negative territories. They have done everything in their toolkit to create a system that still somehow, moves along. But they're out of tools. The next tool that people are talking about is what's called this universal income, or direct injectments of credit into your accounts. That's not something that the U.S. can just decide on doing to its own citizens. That It's something that will take a global effort. So it's, erase that for now. It's not going to happen. And that's the problem. The central banks have run out of tools, and so now the solutions to the root of the problem, which is debt, excessive debt in the system, is not going to be monetary. It's not going to come from central banks. It's going to have to come from politics. So fiscal policy is coming next, and you'll see this. You'll see tax reforms like the U.S. is trying to do, and all kinds of entitlement changes like cutbacks and entitlements, etc. And this is a much more dangerous time, because you can see that in the last 8 years, the markets have run up like crazy because banks are very coordinated. If one slashes interest rates, the other ones follow suit. If one goes in QE programs, the other ones follow suit. Not so with governments. You can bet that the U.S. will do fiscal policy that has nothing to do with what Germany will do, what France will do, what China will do, what India will do, etc. It's different countries. So it's going to be very hard to coordinate between them. And therefore, I see a lot of problems with trying to solve the debt resolutions. The problem is not liquidity. There's so much cash in the world today. It's not the problem. And so my opinion is that war is inevitable, and it's because governments are stepping in to solve an unsolvable problem, because debt is the root of our system. You create currency, you create debt. So it's an unsolvable problem. The only thing is, until now, it was manageable. Now it's going to become unmanageable, because when you give this to governments, they're going to wage war. So sanctions, or threat of sanctions like the U.S. and China, that's only the first step, Dave. You're going to see much more of this. I don't know if the war is going to be, a conventional war with troops and armies, etc., or bombs, but it's going to be a financial war. It's going to be a cyber war. It's going to be all kinds of wars, diplomatic wars, that are going to happen between all these superpowers, and this is very, very dangerous. It's the most dangerous period since 1971, for sure. We're getting into a very rough period. In fact, before the show, I created an exclusive report for your listeners about how to anticipate, prepare, execute during the crash and the aftermath. So people can, investors and savers can, have a master plan on what to do. I call it the Crash Blueprint, and it's on wealthresearchgroup.com/crash. It's a blueprint of what I'm personally doing to prepare for this. So I think a market crash is coming, but different than many of your guests and many people in the industry, I have a very different notion of how it's going to happen. I'll be excited to share with you, but just to understand this is just the first step. What's going on right now between the U.S. and China, it's going to escalate and become much more severe, and it's going to disrupt markets.
So, you're talking about war. We know what a conventional war is with, bombs and bullets. We know what a nuclear war is. It can destroy cities. Now, you're talking about something completely different. You're talking about a financial war. And when you say financial war, what does that actually entail? What does it mean for the people? What do you see actually happening in a financial war?
Well, it's going to be all about trade. So, and changing interest rates and sanctions and cutting people out of the SWIFT and all kinds of stuff that governments can do on other governments, either, overtly, secretly, or over the table. And you got to realize some wars are fought in very unconventional ways that the public never finds out about. So just to realize that the conventional war or the nuclear threat or anything like that comes in later. That comes in if all of these other types of much more stealth maneuvering does not help. What the U.S. will try to do is they'll try to get foreign holders of the debt to take a haircut on the debt, to agree to lose billions, hundreds of billions, trillions, because otherwise, this is unsolvable debt levels with almost 21 trillion today, and the trajectories to about 30 trillion with all these entitlements coming. So other governments will have to take huge losses, and if they don't agree to that, it's going to be a problem. How would you feel if I asked you to give up on $2 or $3 trillion, right? So you got to figure with the tightening period, and they're going to keep tightening interest rates up. They must in the U.S. So they can't do it to the extent that they did that Volcker did, obviously, but they're going to keep doing it. Interest payments are also going to play a role here. So, embrace this new reality, Dave, and it's important that people understand this. This is not going to be, the next 5 years are not going to be the same as the last 9 with monetary policy injecting all this liquidity into the system that on top of the taxpayers' expense, but creating this huge wealth gap between the poor and the rich. But this is even more fatal. And you saw the effects of this. This created populist movements in every country in the world, riots, etc. But the next stage is much, much more problematic because it's going to affect everyone.
Now, I just want to let everyone know that your crash report, that's free, right, on your site.
Definitely. Everything we do on Wealth Research Group, since I founded it, has no threshold. Our philosophy, and the reason I launched Wealth Research Group is to help people build a financial fortress around their families in anticipation of what's coming. And so, therefore, anything you see on the website, etc., it's for you.
Okay, I'm going to put that link at the bottom of the video so everyone can easily go over and get it. And I wanted to follow up on this financial war. Now, this reminds me of 1971 when we were coming off the gold standard, where it was kind of like a financial war where they were preventing governments from getting their gold. I mean, they called it speculation, but now we're on the back end. In 71 we didn't have that much debt. Now the world is flooded with debt. Now we're on the back end of it. And, we really have no place to go at this point because we can't add more debt. So this is going to be a disaster in all these countries.
Sure. And what I think is happening, Dave, and some people who are going to listen to this are 15 minutes into this interview and they say, oh man, I've heard this before. There's gloom and doomers everywhere. Now, I'm not a gloom and doomer at all. And on the big picture, I think the world is getting wealthier. The investment opportunities that are out there are incredible, and I can talk about them. And I feel that the blockchain is you can equate the blockchain, not Bitcoin, the blockchain technology itself. You can equate it to the invention of the airplane. It's going to radically change everything. It's going to bring a lot of wealth into this world. But the system, the payment system that everyone relies on right now, the fiat payment system, the fractional reserve banking, it's in huge duress, and it's going to either be what Ray Dalio calls a beautiful unwinding or a beautiful, deleveraging of this system, or it's going to end really bad. And obviously Ray Dalio is suggesting 10% of your wealth in gold. So, he thinks that governments will not be able to manage this properly. But I want to also talk about the crash. Okay, so obviously everyone knows that, and I don't want to give time predictions or anything like that. I just want to tell you what it is, because I think what's happening right now is that most investors get so much information. They're bombarded with information from every side. They do not know what to choose anymore, and the worst thing that happens to the average investor is that he becomes indifferent. He says, "Oh, you know what? I used to believe in gold or silver, etc. Now I don't anymore. The crash is not coming," because he's heard the end of the world so many times before. He's becoming indifferent to that. But on the flip side, there are people who are becoming indifferent to opportunities. They're saying, "Oh, there's no opportunities anywhere, etc." So people are becoming indifferent both to crashes and to investment opportunities, and this is very detrimental, because one of the other is going to happen, and you're not going to be prepared. So the worst thing that people say on interviews is these time predictions, and it's important not to give things time specific dates because it usually doesn't happen, right? I just want to say that the stock market is incredibly expensive. Interest rates are returning into negative rates, and that's why you see gold breaking out over 1330 and silver breaking out as well. And it's basically a new gold bull markets that we're really in the early innings of. With regards to the crash, a lot of investors are holding a lot of cash on the sidelines. Pension funds are at record cash levels. Warren Buffett has $100 billion on the side. In a normalized market, he would have $20 billion. That's his preferred amount. So he's 500% larger in his allocation to cash. Think about that, $100 billion. Think of how expensive he thinks the market is. Now, between 2000, so from the peak of the dot-com bubble until the peak of the 2007-2008 crash, if you draw a line, you'll see that stocks went nowhere for 7 years. So in 2008, when 2008 came, people were disgusted with stocks anyways after 7 years of no results. And when they sold off hard. The natural resources sector came off a huge boom in the years before. So all the people that sold were selling profits. This time around, it's the opposite. And why do I say this? I say this because many people in the precious metals industry who want to invest in the cheap shares, the top quality names that are out there, are waiting on the sidelines because they think this will happen again, that the market will crash, but natural resources will crash as well. This is totally different. The NASDAQ, the S&P 500, and the Dow Jones have been going up for 9 years straight. The NASDAQ is up almost 400%. We're talking huge gains. And this is the mass population right there. You're talking hundreds of millions of investors who will be taking profits in the next few months. On the flip side, the natural resources sector has been miserable, horrible, except for a few months. In 2016, it's been either going sideways or tanking. The people who hold shares right now in the natural resources sector are not sitting on huge gains, and they will not sell because there's no incentive to. On the flip side, the people who are selling all of these expensive stocks will look at what's cheap, and they will see the commodities are very cheap. Remember, if fiscal policy happens and tax cuts happen, what's going to happen is all this cash will come into either private businesses or public businesses. They're going to help all these indebted companies refinance, reservice their loans, and we're going to see growth. After the crash, we're going to see growth. No matter what you think about the system itself, if it's going to be problematic or not, you've got your physical gold and silver for that. You got other safe havens currencies. Safe haven assets for that. So if you're ready, if you got cash allocations outside the banking system, you're ready for a crash. You can survive a crash. You can survive a reset of the monetary system. What I'm telling you is, after this is all done, there's going to be huge growth. And growth means commodities. Growth means precious metals. And so I think that the next crash will not include the natural resources sector. And if you're waiting on the sidelines, like many people are, to buy even cheaper than today, you're going to be fighting in a bid war against the heaviest pockets, the deepest pockets, and the heaviest players in the market. And I don't think people stand a chance. So that's why it's important to, if you don't want to go all in, that's fine. Make sure you have allocations to opportunities as well as safe havens. And our safe havens report is at wealthresearchgroup.com/safe havens, where we talk about 5 things you can do, 5 safe haven assets that people can take advantage of. And with our gold stocks manual, the complete guidebook, it's on wealthresearchgroup.com/gold playbook. So that's what I think about the coming crash. Remember, we're sitting on huge gains. This can go on for another year, Dave, of the S&P 500 going up, the NASDAQ going up. the Dow Jones going up. This is not over yet. There's so much cash lying around. Compare that to bonds. Really, think about a fund manager, how he sees the market. He says, okay, I can buy a good quality business. I'm buying it expensive, sure, but what's my alternative? A bond that's guaranteed to lose me money? So there are funds that get calls from clients, and they tell them, look, I don't want you to hold cash. I want you to do something. So the fund manager has to do something. What is he going to do? He's not going to buy a negative yielding bond, right? And most funds do not buy gold and silver. They're going to go into stocks. And only when this bubble finishes, they're going to look at gold and silver and say, hey, this is so cheap. Or they're going to look at zinc or copper or lithium or cobalt and all these commodities that are essential. And they're going to say, this is cheap. I want in immediately. And that's why I don't think the commodities sector has a lot of downside at this point.
Now, just staying on this track, I wanted to talk about gold and silver. I mean, we see gold right now above 1,300. Silver is making gains, and we haven't really seen this in a while. I mean, moving up like it is right now. It's down a little bit today, but we can see that it's trying to push up, and it looks like the paper contracts that they throw at gold, it's not really suppressing it anymore. Are we seeing gold really moving right now? Do you think the central banks, do you think they don't have the ability to suppress it any longer?
Well, again, this has to do with two things. First of all, it's going up because of North Korea. That's why it's also selling off, because it ran up really quickly. So you're seeing some people that are out of the trade because they see that the North Korea situation is contained at this point. But what really is driving gold forward is that negative interest rates are back. The 2-year and 5-year are already in negative territory. If the 10-year is going to be in negative territory, that's going to propel gold even higher. And there are probably not going to be any more rate hikes this year. So all these promises of rate hikes that are unfulfilled have brought people back into the gold market. Remember, gold is a very good diversifier. When it goes up when other things do not. So if you're building a well-balanced portfolio like a fund needs to do, gold allocation is very important, and most funds will not touch cryptocurrencies, obviously because of the some of the risks involved with going into a very new industry.
Now, you mentioned cryptocurrencies, the blockchain, and we mentioned gold, how that's moving up. Now, Bitcoin, Litecoin, Dash, there are many different cryptocurrencies out there. They've been moving up, and people have been looking at this saying, wow, this is incredible. And then all of a sudden, Jamie Dimon came out and said, Bitcoin is a fraud, and all of a sudden, Bitcoin went down. Why do you think he all of a sudden came out and said this? I mean, he's from JP Morgan. He's the head of JP Morgan. Why do you think he said this at this point? Why did he have to say Bitcoin is a fraud?
Well, for one thing, what happened is Jamie Dimon is right now at the Delivering Alpha conference that CNBC holds every year. It's all the heavy hitters, and in about 2 weeks, all of these interviews will be released in full on YouTube. But for now, they sent out a glimpse of what he said, and basically he said, you know what, my daughter bought Bitcoin, which basically is like a sexist comment that this girl bought Bitcoin, so it's obviously not smart to do. So that's how he disrespected Bitcoin. And then he said now she thinks she's a genius because it's going up, so he's equating it to a mania. And then he said, look, in the end of the day, governments can say it's illegal, and that's it. It's the end of the party. Obviously, something that's illegal will keep trading, like drugs or anything else that's illegal keeps trading and keeps having a price. But most people do not do illegal stuff, so obviously it's not going to be the same as today. But it's not a fraud. It's obviously not a fraud. It's a new entity that people do not know which emotion to attach to, and as a banker, his balls are shaking as a high level, right up there at the highest echelons of corporate world. His balls are shaking right now because the financial services industry controls the issuance of currency. You think the Fed is important to issuing currency? The Fed controls about a quarter of the currency in the world. Commercial banks that make loans, they control most of the currency issuance. What they do is when you originate a credit card loan or a mortgage loan, etc., the private sector this controls 75% of the world's currency. He's dependent on this system, and so anything that approaches him as a threat, he's going to say it's a fraud. Obviously, like you're going to say your competition is a fraud. So he's just being sophisticated and smart in his mind by discounting it. And I can tell you, because I know this for a fact, Dave, JP Morgan has representatives in every blockchain conference on the planet. They're part of the Ethereum Alliance, for God's sakes. He is lying through his corrupted and the guy, I can't even understand what he says. He has such a bad accent. He has manipulated, along with his team, the silver market for years. That's a crook. The guy's a crook. So anything he says is obviously with the intent of serving his own agenda, which is to keep servicing his lavish lifestyle. What I can tell you is JP Morgan is well deep in the blockchain industry. It's a huge backer of Ethereum. The NASDAQ is testing right now how to work the blockchain because they want to trade 24/7, right? More fees. The Department of Defense is testing the blockchain. This is much bigger than Bitcoin. Bitcoin is the tip of the iceberg. Bitcoin is one cryptocurrency that took fire, but the potential is in the blockchain itself. The technology of the blockchain itself is the real game changer here. So personally, if you got involved in Bitcoin early, amazing. It might keep going up for years. That's true. Remember though, the opportunity, it's like David, if a friend of yours tells you there's a mountain full of gold and you start running to that mountain and you see a few coins on the way there and you take them and go back. That's how I feel about Bitcoin. The huge opportunities in the mountain, the huge opportunities in blockchain. So it's not not only is it not a fraud, it's probably the most innovative technology in the last 2-3 decades. It's going to really change the financial services sector, and it's going to create a chance for 75% of the world who is unbankable, people that do not have a bank account and do not have access to global trade to become part of the world. It's going to create a lot of wealth.
So do you think the central bank and the private bankers, are they trying to take control of the blockchain technology? I mean, is it possible for them to control it?
No, it's not possible. They can embrace it. But, Dave, it's important for people to understand. JP Morgan, the Fed, etc., these are institutions. Behind an institution is a person who has 24 hours to think, decide, act, just like you and I. These are not superhumans. They're not smarter than other people. They're just very manipulative, and they're criminals, basically. And they control the system for their own good. But they cannot control this new decentralized public ledger called the blockchain. There's nothing to control. If you want to control, the only way to really control it is to shut down the internet. Obviously, that's not doable. The world is moving into the blockchain. It has innumerable applications, and honestly, the best advice I can give anybody is once you finish listening to this interview, lock yourself in a room, close your cell phone, study the blockchain for the next 24 hours online, and understand that this is your opportunity as an average person and a part-time investor if you can find the right vehicles to participate in this. And I can tell you this. I have spent the last 3 months in conferences. I have met with venture capitalists, miners, developers, the works. I've seen everything. There is an opportunity that's going to that is humongous. And with Wealth Research Group in the next 2-3 weeks, we're going to feature our top number one opportunity in the blockchain sector. And what I can tell you is it's not a cryptocurrency at all, and it's not an ICO. So I've done so much research on this. I'm very confident that the blockchain opportunity is enormous, and it's just getting started. I mean, most people do not even know what blockchain is.
No, I agree with that. I think there's a lot of people out there, they've been hearing it, but there's not a lot of people that are actually in it and experiencing it and understanding what, all the applications and what all these applications can do for society. And you were talking...
Sure, just to clarify, Dave, before we move on, I do not think for a second that cryptocurrencies are an alternative, or you can compare them with gold and silver. It's very different types of I wouldn't even call types of assets or types of value creators. So in my portfolio, I did not trade 1 ounce of gold and silver for cryptocurrencies. I did make a lot of money in cryptos, but as a whole different part of my portfolio.
Right, I agree with that too. You really can't compare them. I see the the blockchain, I should say, as a vehicle of, using currency to have trade and things like that. And it can be used for a lot more things than just that. But I don't think, I think gold and silver, that's, maintaining your wealth, insuring your wealth, and other things. But I think you're right. They're two separate animals completely. I wanted to talk about what is happening this fall, because, we have the debt ceiling coming up here in the U.S. We hit $20 trillion worth of debt here in the U.S. I know there's unfunded liabilities, and the debt is much higher than that. We also have the budget coming up, and there are many cycle analysts that are looking at what is happening, and they're saying that, we could be heading to something this fall. From your research and from what you've been looking at, what do you see coming this fall with everything that I just talked about?
I really don't think there's going to be anything too threatening in the next 2 or 3 months. Sure, there's a problem with the debt ceiling, but what is the debt ceiling, right? It's a term. They can raise the debt ceiling or do whatever they want. They control the debt system. As long as other governments do not pressure the U.S. government to stop raising the debt ceiling, which they won't, because that would mean that they distrust the dollar, and this will create a bond crash, etc. And nobody wants to panic, because think of all the governments in the world. They all hold more U.S. dollars than the U.S. economy itself. So more than 50% of the U.S. dollar is outside of the U.S. border. That's the petrodollar system. If something happens to the dollar, it's not detrimental just to the U.S. It's detrimental to every country in the world. So what they want is a solution that is not so disruptive. They're gonna probably raise the debt ceiling. Obviously, what I am more worried about is not the debt ceiling, but more of what's going to happen when the Fed starts to unwind their balance sheet and raise interest rates again for the 4th time, because every tightening cycle we've seen since 1971, Dave, about 2 years after it started, so it started in December of 2015, we're approaching December 2017, and about the 3rd or 4th rate hike was signaling the top of the market. So that's much more important. That's pretty close. These two things are pretty close. They've already done 3 rate hikes. The next one is going to be the 4th. We're coming on 2 years. So very important that people understand that the stock market doesn't have so much more to go. The only thing that's propelling the stock market higher is the fact that there are 0 alternatives to the dividends that stocks issue. At this point, the yield, and the fact that the central banks own equities now. So the Central Bank of Switzerland is the best performing company in the Switzerland Stock Exchange this year. Could you imagine? The Bank of Japan owns more than 50% of Japanese ETFs. It's a huge distortion in the markets, and that's more worrying to me because this could affect your job. This could affect your immediate livelihood. Most people do not have huge stock trading accounts. That's not the problem. Most people are worried about retirement, what's going to happen to their entitlements, what's going to happen to the disability, etc. This is the huge problem, and these are more long-term problems. So, for me, I decided a long time ago that self-sufficiency, becoming my own vehicle for wealth and not trusting the government for anything, is the best way to go. And that's why I have I do what I can to grow my own wealth, my own businesses, my own education, and I invest in myself. It's very important that people develop a secondary source of income. Developing these gives you assurance, and diversifying yourself out of counterparty risks, out of derivatives, out of assets that have a lot of exotic risk involved is very important as well. So to answer your question, in the next 2 or 3 or 4 months, it's all noise. The real issue is what's going to happen long term with the debt resolution and how you're preparing for this. And this is the reason why I created that special report, because the idea is now how to prepare, how to anticipate this, and how to survive it and thrive through it. Because you know as well as I do, the wealth, all the buildings in the world, the cars, the businesses, etc., they're not evaporating. They're just going to transfer ownership. And so you want to be on the winning side of all of this situation.
Lior, thank you very much for being on the X22 Report Spotlight. Once again, how can people see your work and get your reports?
Well, first of all, the wealthresearchgroup.com is the website. On the top menu, you can see Special Reports tab. Press that. It's going to open a world of a wide range of our top-notch special reports on a myriad of subjects that will interest any investor. The main thing with Wealth Research Group is the newsletter. It's we're every 2 or 3 days, our highest convictions, ideas, updates on the economy, and about once a month we issue a specific idea, specific investment opportunity that we have done a lot of research on, due diligence, and we've vetted and tried to poke holes in, and we feel it's a compelling opportunity for investors. And right now, as I'm telling you, the blockchain is very, very attractive, and also precious metals in various forms. So we've been very lucky thus far in 2016 and 2017 with helping people, and hopefully that's what we can keep on over-delivering.
Lior, once again, thank you very much for being on the Spotlight, and I'm going to put all the links at the bottom of the video to make it easier for people to go over to your site, and this way they don't have to search for that, all the information. Thank you once again. I appreciate it.
Thank you very much, Dave.